Hello and welcome, I'm Suyash Maheshwari and you are watching Last Tick here on News9, where we bring to you the lowdown of the day's action on the Lal Street. And Indian markets ended in the red on Friday, with Nifty snapping out of its 5-day winning run. But despite today's 0.5% fall, I think the overall texture of the market still remains on the positive side. But before we get into, let's first understand what led to Friday's correction, because both global as well as domestic factors are at play today. On the global front, the handover was weak as the latest US economic data showed a sharp slowdown in growth and pointed to persistent inflation. US gross domestic product expanded 1.6% in the first quarter, sharply below expectations of a 2.4% expansion. Along with the downbeat growth rate for the quarter, the report showed that personal consumption expenditure price index, which is a key metric for measuring headline inflation in the US, increased at a pace of 3.4%, well above the previous quarter's 1.8% advance. Now, this has raised concerns over persistent inflation and put into question whether the Federal Reserve, the US Federal Reserve, will be able to cut rates anytime soon. Taken together, both the findings, the high inflation and slow economic growth, it perhaps indicates that we are heading towards, or at least looking at, a stagflationary environment, which is a combination of slowing economic growth and rising inflation, and could be another headwind for the policy makers moving forward. If you look at the Fed Fund futures trading data, it suggests that there will now be only one rate cut in calendar 2024. Now, this has also led to a sharp spike in the US 10-year, which by the way briefly surpassed 4.7%. It's back below 4.7% now, in the range of about 4.68%. But again, we are at a fresh 5-month high. Adding to the woes was a spike in Brent crude, which is now inching closer to the $90 a barrel mark. And as we know, a rise in both these metrics is bad news for India and other emerging markets. But back home, again, banking and financials kept the market under pressure today. Bajaj Finance was the top drag. It fell almost 8%. Of the company's Q4 earning report showed a decline in net interest margin. Also, the management guidance for FY25 was below its long-term guidance on multiple metrics such as the AUM, which is asset under management growth, credit cost, ROA, return on assets, and return on equity as well. That perhaps further roiled the sentiment. And Bajaj Finance, was not the only one. Bajaj Finserv, its holding company, Tech Mahindra, ICICI Bank, SBI, IndusInd, all contributed to the downside today. Now, coming to why I think that the market texture is still overall on the positive side, because apart from the banking and financial sectors, other sectors, try to cap the losses today. In fact, another historic laggard at least, which is IT, it was leading from the front at one point. Of course, Tech Mahindra led the charge, and this was on the, this was because the street, it seems, is impressed by new CEO Mohit Joshi's 3-year turnaround plan, which he has coined Vision 2027. But, apart from banking and financial names, at least all sectors were trying to cap or limit the losses. And also, if you look at the overall texture of the market, the broader markets, they are in the green. In fact, mid-cap index hit a new record high today, and the small cap index also ended higher. Both indices gained 0.5% to almost 0.8% in today's session, and this has kept the overall breadth in the favor of the bulls. I mean, the advanced decline ratio is pretty much at 1:1, but slightly leaning on the bullish side. But joining us on the show now is Santosh Meena of Swastika Investmart. Santosh, thank you for giving us time here on News9. I mean, we witnessed some bit of a profit taking today, but this was of course on the back of some correction in banking, financials and weak global cues. But the index did manage to defend 22,400 levels, which I think is important for two reasons. One, it coincides with the 20-day moving average, and it is also where the 61.8% retracement level of that entire rally from the recent bottom, the April bottom of 21,777 to the from the record high to the recent bottom. That's where the 61.8 retracement level is. So, what's your sense of things now? Do you see today's correction as just that good old profit taking, and the bias still remains on the positive side, or are you concerned about this data that is coming out from the US, which again is indicating that stagflation could become a reality over there?
Yeah, hi. Yes. So yes, I was expecting good move in the market today, but today's closing is disappointing because yesterday Nifty managed to close above important hurdle of 22,530 level. So there should be a follow-up buying in today's trading session, and however, Nifty managed to close above its 20-day moving average. So let's see. Monday's session is going to be very important because if Nifty managed to hold its 20-day moving average, then we can expect positive moment to continue because anecdotally the day first days of any new series high low of first day's new series act as a strong support and resistance. So today's high of 22,620 will act as an immediate hurdle. If Nifty managed to cross this level, then there is a good chance then we are heading towards 23,000 level. But if it fails to cross this level, then there could be a risk, and this is because of the global reason, and we are seeing the pressure in IT stocks because Nifty IT index once has slipped below its 200-day moving average, and in today's pullback, it again failed to cross 20-day moving average, and we are seeing selling pressure. So today's data, I think yesterday we have seen the core PCE number, and today we are going to see actual PCE number that will be going to very important. And next week we are going to have a Fed meeting. So global cues are going very important. So from the level perspective, yes, today's high is going to be crucial for the market. Nifty managed to cross this level, then we are going to head towards 23,000 level. But definitely domestic economy facing stocks are doing well, especially banking and I think capital goods and other stocks. And today we are seeing some buying interest in beaten down chemical and API related stocks. I think
Right.
this time we are going to see some positive earnings surprise from this chemical and API related stocks.
All right, domestically things are looking rather all right at this point in time, but global headwinds could play spoil sport going forward. That's the view on Nifty. But Santosh, stay with us. It's time to slip into a short break. On the other side, we have plenty more to discuss with you.
You name a place and there is a marathon.
Running in the snow is a much more tougher thing than running just in the oil.
Everything is very very different from the plains marathon. जहाँ से मेरे को लगा था कि it would be a piece of cake, इसके लिए बहुत मेहनत करनी पड़ती है, जैसे दिखता है वैसा होता नहीं है सर.
It is definitely much more tougher.
This and more. Streaming on News9 plus news is now content. Subscribe and get free vouchers.
How do you fulfill that promise? Because ultimately expectations have to be met. If you look at the political landscape, is it really changing for women? And what is the inability of the forces that dead bodies surface but not the living people?
Welcome back. You're watching Last Week here on News9, and remember, on the domestic front, we are in the midst of the earnings season, the fourth quarter earnings season, and coming out tomorrow will be ICICI Bank, which is India's second largest private bank, and they will report the numbers tomorrow, which is April 27. Now, according to Brokerage Reports, ICICI is expected to report a robust set of numbers on a year-on-year basis, but sequentially the numbers are likely to be soft amid a quarter-on-quarter decline in net interest margin. Now, net interest income, which is the difference between interest earned and the interest paid, is anticipated to stand at 18,982 crore, which is a jump of about 704% compared to the previous year, but about 1.6% on a quarter-on-quarter basis. Profit after tax is expected to reach 10,323 crore, reflecting a 13.2% growth YOY and a marginal 0.5% uptick quarter-on-quarter. Year-on-year loan growth is anticipated to be robust at 18%, but quarter-on-quarter it is expected to be more subdued at around 4%. Net interest margin, which is a key metric of profitability for financial institutions, may contract once again, with estimates ranging from a 10 to 20 basis point decline. Now remember, NIMs in the previous quarter, in the third quarter, stood at about 4.43%, which was lower than 4.53% it was at when at the end of the September quarter, and 4.65% it was in the corresponding quarter of last year. Now ahead of the earnings, the stock ended slightly lower, snapping out of its 5-day winning run. But on Thursday, which is yesterday, the stock did manage to break out of a range that it had found itself since early March, even reaching a new record high in the process. And Santosh, I'll come to you. How is ICICI looking on the price chart? We have seen a breakout finally, and on Thursday another strong surge to record high levels. A little bit of a jittery Friday considering that earnings are tomorrow. What's your assessment on ICICI, sir?
Yes, ICICI Bank is continuously delivering a strong set of numbers, and I think this time again it will deliver a strong set of numbers. But yes, let's see how stock will react, because at 1100 there is a strong fight between bulls and bear, because highest OIN is built up at 1100 call option and put option. So there will be tussle between bulls and bears at this juncture. So if it manages to cross 1125 level, so then we can expect this positive momentum to continue towards 1170, 1180 kind of level. And if it fails to cross this 1125 mark, then on the downside 1080, 1090 will act as strong support level. So there is high probability that it won't react too much on earnings, because most of the positivity is already factored in. If there will be any positive surprise, then we can expect further rally towards 1180 mark.
Alright, that's the view on ICICI Bank. Remember, the numbers will come out tomorrow on Saturday, April 27th. So the market will only get to react to it come Monday. But a company that did come out with its numbers, and it just came out as we were chatting, Santosh, is Maruti Suzuki. The numbers of India's largest car maker, I mean, they look decent. The first print does look decent. There is about a 45% jump in net profit, and this is on a year-on-year basis. Net profit in the quarter gone by, which is Q4 March quarter, was at 3,877 crore, a 45% YOY increase from the year ago period. Revenue in the quarter stood at about 38,235 crore, which is 19.2% higher than the previous quarter, where revenue was at about 32,060 crore. EBITDA, which is earnings before interest, tax, depreciation and amortization, jumped almost 40% to 4,685 crore versus 3,350 crore. Now Santosh, coming back to the stock, I mean, Maruti Suzuki has done fairly well, in fact really well this calendar year. It did manage to scale 13,000 levels just a couple of sessions back. What's your assessment of Maruti Suzuki? I mean, this particular company, we are, all of us are focusing, at least in the auto space, towards EV and EV portfolios. Maruti Suzuki doesn't have too much to show for it as far as its EV portfolio is concerned, but the stock, I mean, that again, it has been on a rally. What's driving this stock, Santosh?
Yes, if I talk about the Maruti Suzuki, then yes, there is a strong bullish momentum, but I'm looking at the numbers. This is slight miss on the margin front, but on the technical front, today's low is at exact 20-day moving average. If it manages to hold this level, then we can expect this positive momentum is likely to continue. I'm looking for the 13,000 mark, where the highest for open interest is built up. So I would see if bulls manage to take out this 13,000 mark, then we can expect this positive momentum to continue. In any case, if it slips below 12,700, then we can expect a dip towards 12,000. So for timing, there will be a range of 12,000 to 13,000. But if it manages to close this 13,000 mark, then this positive momentum is likely to continue.
Alright, that's the view on Maruti Suzuki. The numbers are looking healthy. Margins are slightly below expectations. That's the word coming in from Santosh. But, Santosh, April was a choppy series. We have kick-started, May on a slightly slower pace. But, considering that the kind of recovery that we have seen in the past 4-5 sessions, and, what lies ahead with Fed policy and, Q4 earnings, what are you betting on for the short term, sir?
Okay, so at the start, I told you that I think this could be positive earning surprise from the chemical and APIs name, and the chart structures are telling similar thing. So first stock will be my Divis Lab. Today it is already up 5%, but I think this momentum is likely to continue. So buy Divis Lab, where 4625 will be near-term target. 3800 should be a stop loss. Similar Deepak Nitrite, there is a classical triangle formation breakout. So 2700 will be your target. 2400 should be a stop loss. Another is Hindalco. I'm bullish on the metal theme. In April month, they did well, but I think this momentum is likely to continue as the copper prices and aluminum prices are soaring globally. And the target will be 725. Stop loss would be 615. Another is Bank of India. I think PSU banks will also continue to surprise on the positive side on the earning front. And Bank of India is consolidating for last 3 months. I think this consolidation is likely to break out on the upside, where 175 should be your target, 144 should be a stop loss. Another interesting counter, Sun TV. It is bottoming out with a classical inverse head and shoulder formation. Today we saw a breakout with a good volume, and it managed to close above its 100-day moving average. So I think this momentum likely to continue towards 720 level. The stop loss should be 645.
All right, Divis, Hindalco, Sun TV and Bank of India are on the radar of Santosh Meena for the short term. Sir, thank you for your time and thank you for your insights. Always pleasure speaking with you.
Thank you. Have a great weekend.
But that's all we have in this edition of Last Week. We'll see you on Monday at 9:45 a.m. on First Take. But coming up next is Business Plus.
It's probably the best kept secret in India.
Family-owned business, which has been extremely clinical in their approach. They have not hesitated ever to kill their darlings.
Typical to a